Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will update our classical technical analysis view over the short term for Carnival Corporation. And let's start with the charts. First of all, the major structure as usual over the monthly chart, and we have a lot to talk about in this chart. First of all, we can see that there is a time when the stock was moving in a sideway. Of course, it was a giant sideway between $18 as a support and $54 as a resistance. This time, or that time, was in the late 90s and in the early 2000s. And here we go. As we can see, the resistance always appeared almost at the same horizontal place around $54, and all-time support almost at the same place around $19. Of course, I'm talking about areas. This monthly sideway got distorted 2 years before the COVID-19, and we can see that after the successful break above the resistance, the stock, and due to the some weakness before the COVID, it didn't manage to use 54 as a support to continue its positive move or positive trend to the upside, targeting maybe 75 once more and maybe a psychological resistance at 100. It failed to respect this key level over the monthly chart, and it did not manage to form a support or to form a bottom above or around that level. Indeed, it broke to the downside, and the COVID-19 increased the drama, and it continued its free fall. It even broke the monthly support around $19, and we can see here that the $19 is not as strong as it was before. Long time ago, this level or this area managed to push the stock upwards relatively quickly with much lower volatility. But we can see here things are volatile. The picture is not clear. Sometimes it breaks to the downside, giving a bearish indication. Other times it returns once more above the significant support, giving it a bullish indication, and so on. So the game being played around this area is minimizing its strength. It's not as strong as it was once before. That's why the first change and update, that this level, which is $19 approximately, its significance is going to be decreased. Instead of 2 points, it will be just 1 thickness point, just to indicate that it is not as strong as it was long time ago. Now let's get a little bit into the chart and see there is a substitute or alternative, more important resistance or key monthly level coming into action, which is the $30 level. And we can see obviously why, because it created a clear resistance that resulted in a peak formation around this level, and it is clean, no increased volatility, no false breaks, nothing. It's clean touching of the resistance and clean reflection to the downside. So the $30 is now considered the most important, significant monthly level on this monthly chart for Carnival. Okay. Over the long term, it's okay to speak about negativity, but this will be in a moment later when we check the weekly chart. For now, I can see there is a lot of selling pressure over the last 3 months, and the candlestick size is increasing, which means that the selling pressure is getting stronger and heavier. And we can see this was accompanied by increase in the volume during the fall, and we can notice that every single month there is an increase in the volume during the selling pressure that took place. Of course, it's clear now that the sellers are in control and have the upper hand. Testing this level, which is over the weekly, I don't think this candle is having any sort of reversal criteria. So there is nothing we can say about a reversal for now from the monthly chart. So that was it. The structure of Carnival over the monthly chart is clearly bearish and under very strong selling pressure as long as it is below the significant level over on 19 level, and as long as it is below the $30 level. Now let's check the picture over the long and medium term from the weekly chart. And it's easily, and you can easily notice that the stock is in a clear long-term downtrend consisting of lower highs as well as lower lows. And this helped us to draw the downtrend line and its channel line. Of course, we can see here there was a break more and more to the downside below the downtrend channel line, indicating accelerating move to the downside. A return above this channel line is not an indication of reversal and was not an indication of strength. It was just a good and relatively strong correction, just a correction, and it again returned once more to the original channel to the downside, and it's still stuck below the downtrend line over the weekly chart. So the environment is bearish, and this is clear. If we took a glance at the candlesticks, we can see that the bearish volume that we noticed from the monthly chart is confirmed over the weekly chart. And here you can see on a rising week, the volume was decreasing. On falling weeks, volume was increasing. And of course, we can notice here a price gap to the downside. So this is confirming the bearish pattern of the volume that we noticed from the monthly chart. So when we speak about the long-term picture, Carnival is in a major downtrend and is within an impulsive wave to the downside. And again, although it is testing a very important weekly support at around $8 approximately, but there is no any indication yet to be seen for a correction, because reflection will not be automatic. Just reaching the support does never mean that the stock should automatically start correcting to the upside. It takes time, it requires some kind of accumulation, some kind of pattern formation. At least when you check the candles, you should see some kind of reversal candles. We should notice some increase in the volume during green weeks and decrease of the volume during red weeks, some kind of volatility indicating the battle between the buyers and the sellers. This is not happening yet. We did not have time to check the support multiple times. For example, if you notice what happened here, the reflection first of all came after around a month or more, little bit more of testing the support. And even when it started to go upside, there was a return once more and a kind of consolidation before things changed and took place as a strong correction upwards. We are just beginning to test the important support over the weekly around the 8 area or around the $8 zone. So it's too soon to speak about a correction targeting the nearest resistance over the monthly chart, which is around ranging from 16 up to 20, which means that this is a potential correction of a 100%, but it's too soon to speak about such a correction because the support is just being tested. No time took place for the required accumulation that may help with such a strong correction. In addition, there is no signals yet, even the volume is on the bearish side. Excuse me. Now let's jump to the short-term details over the daily chart. Here we can see that over the daily we still do have a very strong downtrend over the very short term, which we can say it is just the latest move to the downside is also under selling pressure. And to keep things in context, Carnival now is in a major long-term downtrend, and the impulsive wave is downwards, and the short-term move is also down. So there is no signs of a reversal, even over the shortest time frame, at least until now. And this should lead us to a question. What are the conditions that are required to be met in order for the stock to start its correction? And this is a good question. First of all, the stock should start moving up in order, the stock should start moving upwards in order to break very important resistances. The first of the downtrend short-term move that we have just spoken about, and the second is to return above the downtrend line of the impulsive wave to the downside. So the stock first of all should manage to rise above the $11 area, and of course it would be better if this rise and this break was by increased notable volume. Then we would like to see 2 days, 3 days, better a week, close above the broken levels in order for them to reverse roles and turn into support. Only then we may say that a correction is signaled, with the first target near the nearest resistance around $14 over the short term. Over the medium term, the second resistance and second target may be $16, and over the long term it may reach $19 or $18 area, which is the nearest monthly resistance. So these conditions should be met first in order to signal a correction. a break above the downtrend line of the very short term move, then a rise above the downtrend channel line of the impulsive wave, then a 3-day close is better above these broken levels in order to reverse roles from resistance to turn into supports. Finally, the stop loss point may be anywhere just below the weekly support around the $8 area, and the targets over the short term, if these conditions are met, will be $14 first target, second target around $16 over the medium term, and over the long term we may reach $19. This is the bullish scenario. What if Carnival did not manage to do or perform such a scenario? And even worse, what if the stock broke the very important level of the weekly support around the $8? Then the bearish picture should continue, targeting lower and lower levels, maybe 6, maybe 5, who knows at that time. So the $7 area or the $7.5 area is very critical to be respected, and never ever close below that area in order for the hope of creating a correction to the upside. Any volatility around the 8 area and any close below the 8 area is not good at all. Thank you for watching. Please like, share and subscribe, and see you soon.